Due to the continued existence of unfavorable factors such as the shortage of chips, the conflict between Russia and Ukraine, and the epidemic, the global auto market in the first half of this year continued the difficult trend of last year. Fortunately, in the second half of the year, continuous growth was achieved on top of the low base caused by the shortage of chips in the same period last year. Statistics from LMC Automotive show that in the first 10 months of this year, the global light vehicle sales volume was 66.594 million units, and the year-on-year decline has narrowed to 0.9%. This figure is 14.703 million units, different from the total sales volume of 81.307 million units in 2021. In other words, as long as the average monthly sales volume in the last 2 months of this year can reach 7.352 million units, the global light vehicle market is expected to usher in positive growth again throughout the year. However, according to the latest data released by the world's major auto markets, the final result may not be so optimistic. According to incomplete statistics, although among the 12 major auto markets, 11 had good year-on-year growth in November, among which India and Germany had growth rates of more than 30%, but the situation is quite difficult in terms of cumulative year-on-year growth. Except for China and India, which have turned positive, the remaining 10 countries are still in a state of negative growth, and even Brazil, which has a decline of only 1.4%, is very difficult to achieve a counterattack. So, among these 12 countries, why are only India and China the lucky few? Hi, welcome to Auto Age, and let's move on to today's topic. First of all, let's talk about the reasons why China can be the lucky one. Although, in the first half of this year, China's auto market also experienced relatively large losses due to the epidemic, especially after the 2 major auto cities of Changchun and Shanghai adopted strict containment measures in March, April, and May. The production and sales of the entire domestic auto industry were greatly affected, resulting in a year-on-year decrease of more than 1 million passenger car sales during this period. Fortunately, in order to enable the rapid recovery of the automobile industry, various provinces and cities have issued a series of policies to promote automobile consumption, such as increasing license plates and providing car purchase subsidies. Moreover, on June 1st, the national policy of having the purchase tax for passenger cars with a displacement of 2.0 L or below with a unit price of no more than 300,000 yuan also began to be implemented. Driven by various favorable policies, coupled with the continuation of the new energy market's high-speed growth pattern since last year, it has provided a huge increase for the auto market. Therefore, China's auto market has maintained continuous growth since June, making up for the previous 5 months. By the way, it is worth mentioning that in the first 10 months of this year, sales of new energy passenger vehicles in China reached 4.432 million, a year-on-year increase of 107.5%, which has become the biggest growth driving force in the passenger vehicle market. Compared with China, the performance of the Indian passenger car market is even better. In 2022, the Indian auto market will not only end with an increase of more than 20%, but also set a new record in its history. Data show that the total wholesale sales of passenger cars in India in the first 11 months of this year reached 3.509 million units, surpassing the previous record of 3.385 million units set in the whole of 2018. The reason why such excellent results can be achieved is mainly because the current Indian auto industry has passed the most difficult years and is experiencing a V-shaped rebound. Due to factors such as economic downturn, political instability and epidemic blockade, the Indian auto market has fallen sharply for 2 consecutive years in 2019 and 2020. Sales in 2020 fell to the lowest point in recent years, only 2.428 million vehicles. Since then, as the economy has gradually recovered, and the suppressed consumer demand has begun to be released, the Indian auto market has recovered rapidly. While India is about to usher in a record high, 2022 is destined to be another extremely difficult year for 10 countries including the United States, Japan, Germany, and Brazil, even Brazil, which seems to be the most promising. Although the cumulative year-on-year decline in Brazil in the first 11 months of this year was only 1.4%, there is still a difference of 219,000 vehicles between sales and the whole of 2021. For Brazil, which is still recovering, it will be very difficult to reach this figure in December. After all, since 2021, the monthly sales volume of the Brazilian light vehicle market has not exceeded 200,000 vehicles. Therefore, there is a high probability that the Brazilian auto market will end with negative growth this year. If this is the case in Brazil, the situation in other countries will only get worse. After a year-on-year growth of 3.3% in 2021, many institutions predicted at the beginning of this year that the U.S. market would continue to grow slightly. However, due to the continuous impact of the chip shortage, the production of car companies has been restricted, and the inventory of new cars has been insufficient for a long time. As a result, the trend of the U.S. auto market this year is not as good as expected. So far, many institutions have adjusted their forecasts to about 14 million vehicles, which is equivalent to a year-on-year decrease of 7%. Like the US, Spain, Italy, the UK and France were expecting growth this year after modest increases last year. However, the sudden outbreak of the Russia-Ukraine conflict has caused a shortage or even interruption of the European auto supply chain, and the energy crisis has also followed. Auto sales in most European countries have fallen. In the first 10 months of this year, cumulative year-on-year figures in most of the 30 countries that are members of the European Union and European Trade Union, as well as the United Kingdom, were negative, according to the European Manufacturers Association. Among them, Germany, the largest market in continental Europe, may this year be its third consecutive year of decline, and sales may even replace 2021 as the country's low point for more than 20 years. At the same time, Japan and Canada are likely to hit new lows in recent years since 2009 and 2012. Of course, whether it is Brazil or the United States, Germany, Japan and Canada, compared with Russia, it is not a big deal. The conflict with Ukraine caused Russia to be blocked by Western countries headed by the United States in terms of energy, economy, and diplomacy. Most auto companies have accelerated their withdrawal. Difficulties in the automobile supply chain and production, as well as lack of consumer confidence, have led to a cliff-like decline in the country's auto market since March this year. In May and June, there were even less than 30,000 vehicles, and it gradually recovered to 40,000 in August. Therefore, the total sales of light vehicles in Russia in the first 11 months of this year only closed at 549,000, excluding brands that only announced quarterly sales, a decrease of 60.9% from the same period of the year. Based on this calculation, there is a high probability that the total sales of light vehicles in Russia this year will not exceed 1 million units, setting a new low since 2004. To sum up, it can be seen that the global auto market was still in a cold winter in 2022, except for China and India. So, do you think 2023 will usher in a turnaround? Well, thanks for listening. See you next time.